Steve reported a delay again. Meanwhile, Outlook is reporting the U.S. is planning rules that would ban Chinese hardware and software for connected vehicles as soon as today. And President Biden has been caught on a hot mic at a diplomatic summit saying China is testing the U.S. and its allies in the
We believe Xi Jinping is looking to focus on domestic economic challenges and minimize its turbulence in China diplomatic relationships. He's also looking to buy himself some diplomatic space, in my view, to aggressively pursue China's interests. China continues to behave aggressively, testing us all across the region.
Let's dig into China's headwinds with our Chief North Asia correspondent Stephen Angle, who's in Shanghai, covering the IBLAC gathering of top global firms. Also with us is Matthew Chabron, co-founder of TKO Capital, a global group which manages more than $50 billion of assets. Steve, let's start with you. What some of the key takeaways, your conversations in Shanghai? What are you hearing in particular about that step up on stimulus?
The slowdown in China wasn't specifically talked about in great detail in the big open sessions, or according to Jens Eskelund, the European Chamber head here in China, who I spoke to earlier. He says it wasn't really discussed much behind closed doors either. It was more about the areas of cooperation in green tech and other new economy, industries that foreign business leaders can potentially partner up with the local government here. That's what IBLAC or IBLAC is intended to do, to find areas to co-invest. But again, it was on the minds of everybody, and it was almost prescient of Sir Martin Sorrell to say they need to have more stimulus in this economy right now because of the moves we've seen with further easing by the PBOC, and also announcing today that perhaps there's going to be even more measures. Pang Gongsheng and two other top financial officials will be holding a press conference tomorrow. They're not calling this to announce nothing, right? So there will be some sort of stimulus we are anticipating. But this is what Sir Martin Sorrell had to say about the need for stimulus right now.
I think the pressure is intensifying, and the thing I'm looking for is for the government to change their stance here and be a bit more expansive, because they do have wiggle room. I'm looking for a bigger step because they do have flexibility on interest rates and loan, and they do have flexibility to central government budgets, not local government, so they can spend a bit more money. So that's what I'm looking for. I'm looking for a little bit of a reversal in the policy. In the absence of that, I believe it continues to be quite tough.
Quite tough indeed. He says the Fed's 50 basis point cut gives the PBOC perhaps a little bit more wiggle room.
Well, that's right. And the other factor, of course, the property sector. You spoke to Rio Tinto's chairman on that topic and possibly the possible impact of commodity demand.
Yeah, absolutely. I mean, look, there's no secret that one of the main pillars of past economies here in China has been the property sector. It's been in the doldrums now for several years, and Dominic Barton is the chairman of Rio Tinto. Obviously, they have for years sold iron ore for steel making here in the Chinese economy, very much tied to the property sector. And he says the downturn in property as one of the main pillars of this Chinese economy in years past is not over, and perhaps it's going to last a little bit longer. This is what Dominic Barton told me in an exclusive interview.
Key thing is unlocking the consumer, and the challenge with that is you've got, with property prices going down, people having a lot of their wealth in property, they feel less wealthy, and we're seeing the effect of that. I think the property restructuring probably has to continue. I don't think that can change. There's a process they're going through. I think the issue is how do we give people, the consumer, the confidence about where things are moving. Obviously, stimulus programs and so forth are music to people's ears, but I think what we have to understand is there's a deeper restructuring for growth that's going on.
Clearly, the property downturn and the steel issues in China has lessened the demand for iron ore. So there's a surplus in iron ore. But he also told me that these green technologies need steel, wind turbines need steel, and other obviously innovations will need that iron ore going forward. But also copper as the energy transition globally intensifies. Yes, Linda?
Stephen Nagel, thank you so much for that. Let's get to our guests. We have Matthew Chevron joining us here in the Lion City. Your take on how it's looking for China's economy? We're seeing all these measures coming up. Is there a sense of urgency finally, or not?
Well, good morning, Esther. Thanks for having me. I mean, there's a lot of things we just heard in a matter of 5 minutes. It was pretty dense, and a few days after the Fed, action. I think what we are witnessing right now is that many central banks are looking for some excuses, I can say, to give a new price to liquidity. I think that what we've been seeing for the past 10 years now, basically this abundance of liquidity everywhere, and when it comes to China, they benefited from a lot of foreign investments. Now this money is moving out. Mr. Soros just mentioned about real estate, and what's happening right now, I guess, is effectively the perfect moment for central bank, for the PBOC specifically, to say, okay, we might not be giving you a new risk premium indication, but we give you a sense, that there is more liquidity, or potentially more liquidity. Let's see whether this stimulus package is coming or not. But I think we're coming down to some very basic finance, corporate finance 1.0 here. It's effectively what's the cost of liquidity.
The thing is, we're seeing massive outflows from China, and on the back of that, from Hong Kong. Yet you're here from your trip to Hong Kong, setting up a new office. I mean, what's the thinking behind that?
Well, that's actually at the core of the TKO DNA. Create, don't compete. Since that we opened our office in Singapore 10 years ago, and TKO was celebrating 20 years. This year. And when we came here 10 years ago, a lot of our competitors were actually holding in Hong Kong. And today, to your point, we see that the flows, the outflows, are very different. And that's when we took advantage of effectively going there. There are many drivers, to that. We're probably a European-based asset manager with a portfolio of very, very interesting, companies, high growth companies who are looking to effectively come into the wider Asian market, Southeast Asia, obviously, but China. It's a very good timing to be offering some alternatives, to maybe more historically, maybe some US managers, US companies. The whole situation, is great for Southeast Asia, I believe. And I think we're really looking at the whole market, your presence in Singapore, in Korea within 5 years, in Tokyo, and now in Hong Kong, to be able to best serve not only our investors from a capital formation standpoint, but also our portfolio companies, the people that are investing.
First, talk to us about the opportunities we see when it comes to China. The government is really trying to get capital back from the international market, and it is trying to get capital to areas like their innovation, their technologies. I mean, how are you assessing that?
That's right. And that's actually what we've been witnessing for the past 12, 18 months. In our discussion with a large asset owner in China, who've been traditionally very big asset allocators, some large LPs, what they're interested in right now is not just to give you a check and you go, Mr. Asset Manager, put that money, and we'll catch up in 10 years. What they are looking for is really this two-way flow, where the portfolio companies that we invest into, that we finance globally, but specifically as far as we're concerned, a lot in Europe, and then in return, come back to China to effectively bring some expertise, make up for some part of the domestic slowdown that we are seeing. And the dynamic is very different from what we used to experience. And in that respect, I think it's a great trend. And what has been happening between China and the US, overall dynamic is something creating for many of us, here in the ports of Asia, myself in Europe, to take advantage of it.
But the question is, do you trust China's move? Do you trust its policies will remain the same? It's been going on to say that, we want to ease the cuts on the IPOs, for example. Is it enough to encourage you that, the environment is changing and it will stay that way?
The reality is that at the end of the day, the market is always going up. And what we've been seeing lately is that the IPO market or others, even the debt capital market, and we all know that the property segment has been the biggest beneficiary of debt value. Right now, the capital markets are fairly inefficient, right? Dave, they were talking about IPO in the whole region, and we know that the equity capital market, the debt capital market, less efficient than they used to be. So that's where the private capital has huge opportunity. And whether or not you trust the government, as far as we are concerned, it's about effectively at the micro level being able to asset select whose companies want to take advantage of the market share they can build in China. And on the other hand, effectively some Chinese institutions looking at investing abroad, they can do less so in North America and the US right now, and that's where we're trying to take advantage of.
You talked about private capital. Private capital fundraising in China actually hit a new low in the second quarter. What would it take to address that?
Well, deleveraging. I think that deleveraging, is probably item number one. Then effectively confidence. Investors, need confidence, both ways. I think that there are still some part of the market that have not repriced fully. Mentioned real estate, obviously, it's a big one. There will be, and whether or not we see the full effect, there will be some pain, supported, by the market. But like any cycle, particularly for the fully levered assets, there will come to at some point, you will come to a tipping point in value, and that will be the right moment to step back in. That's why we are trying to get ourselves ready, and Hong Kong is a great market to be following right now. We're only real estate is always a lagging indicator. So whether the stock market crash, it happens overnight. Right? So the real estate, the company is so all the investment prices.
Real estate, along with the financial markets, are seeing regulatory crackdown. Are you still worried about that?
You cannot really price regulatory changes because unfortunately you see that across the world. Days, but right now many times we're debating around the US election and what can happen one way or another. As asset manager, as risk manager for us, it always comes down to asset selection. We own private assets. In that respect, we cannot sell the asset overnight by looking at the code on Google. We have to be able to leave and every Friday night go home with our own inventory, and for the next 5 to 7 years, we live with that. So the real estate as an asset class is one that we always like, at the third of our assets globally. It's still relatively early in China. In Singapore, they will be managing the trade with alpha investing in Europe. So we've always looked at taking advantage of the local technology to once again best serve the prices.
All right, Matthew Hentard, Matthew Chevron of TKO Capital. He is sticking around. Still come this hour, we'll have exclusive conversations with JP Morgan's Global Head of Capital Markets, coming from the bank's annual India Investor Summit. Plus, the Colombo Stock Exchange Chairman will be joining us after the nation elects a new leader. Keep it here with us. This is
we deserve the best when we put in all our best. That should be our standard. Yeah, again and again, I choose Pure Foods corned beef. Every can is an expertly crafted masterpiece. 100% pure beef with juicy beefy goodness, ensuring quality and trust and tasty love. Yeah, para sa atin, the best pa rin. Choose the Pure Foods corned beef, the pure standard.
Collaboration is key for team success. With ClickUp, you can easily manage your team's tasks and timelines in one app. Using our Gantt chart feature, you can map out your team's tasks and set dependencies to ensure everyone is on the same page. Adjust timelines, change colors, and add more tasks as your project progresses. ClickUp's Gantt chart feature makes project management a breeze, so you can focus on what really matters, collaborating with your team to achieve your goals. Say goodbye to multiple apps and hello to seamless team collaboration with ClickUp. Get started today.
Close to the overnight exhibition in Asia. We'll walk you through what you need to know to kickstart the European Trading Day. Live from our European headquarters, we bring you the day's top market moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
DOJ or other authorities.
What's going to be this is as the economic picture, the intersections of conflict.
We know that market traders still modeling that jump of 50 basis point cut by the Fed. What will they do next? We know that yields pretty much across the U.S. Treasury curve on Friday morning rose across the board. Even where we are right now, we have 2-year bond futures at 104.30, 5-year bonds at 110, and 10-year bond futures at 114.67. In terms of the dollar, at 12.24.8. Now that the Fed has started cutting interest rates, traders are finding it challenging to place bets on the stock market. The U.S. economy is growing and the indexes are hitting all-time highs. Corporate earnings are expected to keep expanding. So, where are investment pros looking instead? Let's bring back Becky Chabron, co-founder of TKO Capital. First off, 50 basis point cut. Some say it doesn't matter whether it was 25 or 50. Trajectory is it is going lower. How much more are you?
I'm based in the US, as you know, so I can tell you that there is some sticky inflation. There is sticky inflation, and this moving from 5, 15, the grand scheme of things. The reality, as we discussed earlier, is that today we have to operate once again as asset owners, asset managers, asset allocators in a world where effectively the risk-free rate is no longer 0%. It's not going back to zero anytime soon, absent any other big external surprise. And right now we have, once again, to play with that. So do they have room to go further? Obviously, with this election, coming up. If I may, I think the Fed has always been a political tool, very different from the ECB, the DOJ, just talk about China. It's always been a political tool, and it's going to be a political agenda, having the outcome of this election. So traders, short-term money managers have to effectively factor that in. But once again, the long term, as private manager, it's a belief in the assumption that
The thing is, markets are looking at 2.9% by mid-2026. Some say perhaps the Fed could get there much faster. Your take?
It could, but once again, as we were saying earlier, I think that they're just giving the price of liquidity. Our job, I think the traders we are referring about, our job is to rightly price the risk premium. And that's a totally different story. Because I think despite all-time highs in the stock market, I don't know whether you agree with me or not, but we probably are at the all-time risk environment. Global, from a macro standpoint, geopolitical. And where is that reflected in asset valuation? And I think our job, Fed is one component of the overall equation, the best rate is one component, but our job is to properly price the risk premium. And I think that some markets might be mispricing it right now.
All right, so there is currently a divergence in terms of monetary policy. Yes, the Fed is cutting. We have China adding stimulus. We have Japan and Brazil raising rates. Where do you see the opportunities from that?
Well, that's, it's a perfect scenario for asset pickers because you're no longer just buying the trend, you have to do the work. And then that's when you have to do the work that you can be extremely discriminating. Not only in your performance long term, in your client satisfaction long term, and effectively, yes, people have to come down to do the work. And for private markets, you have to be multi-local. You just do not do Asia from London, you don't do the US, from Singapore, and you need this footprint. And kind of like this environment.
So what are you doing specifically in Asia? When we talk about Asia, of course, we have to draw a distinction. It's a huge market. Southeast Asia, for instance, India is the endpoint.
So we've been in Singapore for 10 years, as I told you, Beijing was our hub, when we established here. Then into Seoul, Korea, into Japan, right now in Hong Kong. And we really had three objectives. One was to promote the brand and the investment solution that we could offer to asset owners, in the region, would be a great allocator to the asset class. The other one is to basically convert that unit fundraising. Today, we're starting from zero to 10% of our AUM base coming from the region with some untapped market, but we do that very constantly. And the last one was effectively to deploy some capital. Now, there's no shortage of capital, and at TKO we had no pretension, to challenge the incumbents. But what we think that we can bring some expertise, that would be extremely complementary. That's what we've been doing, over the years. I mentioned real estate. Just announced a few months ago, private credit, which is big for it, half of our credit. So we should perform, just announced this partnership here. And from in this environment, that's a perfect asset class for you.
India, it's been euphoric. It's time for a correction, some say. Valuations are just through the roof, 20 times, PE. Like, do you still get in?
I'm back to, my supply demand, imbalance. What you lost in China, you get in India. From a flow standpoint, and somehow the mix in Japan, which is it's a different story. So I think everybody agree you had this massive flow of capital. Again, leaving China, getting into India, valuation, again, it's a relatively closed market, right? In India, despite being a huge market, we at TKO play in this market. Minority private play in some significant consumer broadcasting, typically investment. But to your point, right now it's purely driven by the supply demand, the inflows. One is to get down your fundamentals on a relative basis. India is a very interesting market that we are looking at, but once again, you need to remain extremely disciplined.
All right. Gotta be careful. All the stretch markets. Matthew, good to have you with us. Matthew Chibron of TKO Capital. Plenty more ahead. Keep it with us. This is
Yes, fried rice? Sí, dahil ang chinesa. May liquid form of that. It adds moisture. And even the cold fried rice with more flavor. Bawat pa ka? Mukhang masarap. Well, yung aji chinesa liquid seasoning mix. Imagine this as the laundry room of your dreams. A new way to imagine your space. LG Wash Tower.
New wash tower is really going to open this space up.
Is it going to continue to grow as it did last year? And what about your own company? Do you think it's got good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back to the history, for most of the last century, we were only giving people pills, small molecule drugs. Then we discovered that we had this whole world of biologics, and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells, we can edit the genome, we can use these RNA therapies to completely transform areas of medicine. Those technology areas they're very nascent stage, and what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapy, that we will also be able to climb to a whole other level of market cap over time.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
And here are some of the top tech stories we're following. Bloomberg has learned that Apollo Global Management has offered to make a multi-billion-dollar investment in Intel. Sources say the alternative asset manager has indicated it is willing to make an equity-like investment of as much as $5 billion in the chip maker. We're told nothing has been finalized, and the size of the
Grabe na pag-cross pa niya.
Bringing you up to the minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this really normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Foxy Blackwell, and this is The Pulse, every weekday only on Bloomberg.
Weighs on the heartbeat of the tech segment across global markets.
Real-time data aspect is going to be, we're going to bring you expert analysis on that. Don't miss Bloomberg's interview with
This tool is a dream for developers. As a developer that works in a team, more communication slows me down. Loom AI enables me to capture a quick screen recording and then instantly turn it into a doc or even a fully populated Jira issue. Because let's be honest, we all hate writing documentation and filling in tickets, even if we know how important it is for reporting books and writing code. This video to text tool enables developers to report issues and receive feedback faster, as well as communicate with other team members without having to arrange meetings to delay the project. Automating the void of this ultimately means that we get more time back to build. Sign up for Loom today to try the Loom AI suite for free.
There's a lot of expectations, people expect great things from me. At the same time, I expect more from me, than anyone else. And every hardship that you go through, it's going to be part of the journey, and every other thing would be complement to your craft and focus on your thing that you want to achieve. I am PJ Obieta, your Filipino pole vaulter.
In power. Nifty futures pointing to high open up by 0.5% right now. Indian Muji, 83 up 7. Now the biggest financial falls in India are in a frantic rush to cover yesterday's secretary of East African economic boom. It's more than putting money into the pockets of everyday Indian investors. Let's bring in Bloomberg senior editor Monica Doshi in Mumbai. Monica, what the cash seems this market.
me sings the Heavenly Milk Creaminess new Angel Coffee Creamer. The new Angel Coffee Creamer now.
Elizabeth Chase Olsen, born February 16, 1989, is an American actress. Born in Sherman Oaks, California, Olsen began acting at age 4 alongside her sisters Mary Kate and Ashley Olsen. She had her debut film role in the thriller Martha Marcy May Marlene in 2011, for which she
This is Steve, head of product, and his company is about to release an app. But it's being reported and delayed again due to thousands of bugs detected. Steve, want to talk?
One thing is liquidity in the market. We've seen that. Right? We've seen average cash trading levels go to 17 billion a day. That's up threefold from where it was pre-COVID level. Liquidity is going to beget more liquidity. That's going to help attract more capital into the region. And I think the country's done a lot of things to attract that capital from a regulatory standpoint. And we think it's going to continue to be support from that standpoint. There's also just the drive to find growth and find yield. Those two things away from a regulatory environment are going to be the biggest drivers.
Kevin, we'll be talking about how hot this market is. In particular, it's IPO market, the hottest in Asia. What challenges do you think it might go through against a backdrop of a Fed that's cutting rates?
Well, I think obviously you mentioned this about valuations and justification for those multiples that continue to ability to grow. Right, we've seen a little bit of slowdown, and whether that's going to become more severe to drive that growth and justify those multiples, that's going to be the key. And I think that's going to be the debate we'll have over the next year as we start to see some slowdown. Markets everywhere are assuming a soft landing. question is if we start to see that softer than expected.
You've struck a very bullish note for India, Kevin. Do you see any of that changing on account of A, slower rate cuts in the US, because India will follow with a lag, and B, the election outcome in the US, depending on who wins? Do you think those factors could significantly impact foreign investor interest in India?
So I think from an election standpoint, that is going to depend on economic policy between the two candidates. I think we've got a pretty good sense of what each is going to go in the direction. Some talk about tariffs. We'll see how those things happen. Those could obviously be a headwind for markets depending on which direction they go. I think also from a standpoint of from the Fed cutting rates, if the rate cuts aren't as rapid as expected, we'd be making the argument that the economy is stronger than expected. So that's not necessarily a negative from a global picture.
Kevin, we've been talking about how the Fed made a jumbo cut. What does it mean for Asian bond borrowers, you think?
I think you're going to continue to see money flow into Asian markets because there will be a global hunt for yield. As you're seeing money move out of some more developed markets, they're going to move in more emerging markets and just looking for those yields. Globally, we're seeing spreads very tight. We're near tights. Asia is no exception to that. So what we're just seeing investors and lenders go out and seek absolute yield, and that's what's the emerging markets are going to benefit from.
Do you think investor appetite has changed, Kevin, on the back of that?
Not as of now. I think that there's still a lot of dry powder out there. It's still trying to find a home. It's looking for opportunities to put it to work, and they continue to just put money to work.
Kevin, thank you so much for that. Kevin Colby of JP Morgan, and of course, our own Monica Doshi. Plenty more ahead. Let's take a look at the Asian markets and how it's shaping up ahead of the open in about 5 minutes from here. And so we'll discuss the outlook for Sri Lankan stocks after the election win of leftist political outsider Anura Kumara Dissanayake. The Colombo Stock Exchange chairman joins us for an It's the countdown to the market open as we bring you the first trade across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Preeti Gupta. And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets. Welcome back. We're keeping an eye on the Sri Lankan rupee. That's after leftist candidate Anura Kumara Dissanayake won a tightly contested presidential election. He secured 5.74 million votes in the country's first ever runoff. Best known in Sri Lanka as AKD, Dissanayake campaigned on a platform of clean governance and combating corruption. He's also promised to renegotiate loan conditions under the country's IMF bailout. We'll also monitor Sri Lankan stocks once trading starts at the top of the hour. Now let's get reaction now from Dilshan Tekra, chairman of the Colombo Stock Exchange. Dilshan, good to have you with us. How concerned are you about this government change?
Hi, and thank you for having me. We are not concerned at all. I think the people have spoken. Sri Lanka has a very strong tradition of having a vibrant democracy. The other word is democracy in Asia. Changes of government have been a thing quite familiar to the public over the last 10 years. We've had 4 changes in government. But I must mention this has been one of the most peaceful elections that we've seen historically. The people have spoken, they've given a mandate.
170 traders received $1,000 extra each. Why? Because we process all payouts in 48 hours, not 24 hours.
We still continue on the growth trajectory and the recovery journey that it has been on over the last 24 months. So to answer your question, I'm not concerned.
But the thing is, Dilshan, AKD is not a tested politician. Do you think that investors, international investors, may be concerned even if you're not?
So I think we'll have to wait and see in that respect. You acknowledge that Sri Lanka for the last 2 years has been on a journey from forward into recovery. So the foreign investment sentiment hasn't been great over the last 24 months because we are a country in restricted default as we speak. So I don't think that will really have too much of an impact. If you look at market turnover levels, we've seen the last 3 to 4 years turnover being dominated by domestic investors. So even as we speak for this year, we have over 85% turnover being dominated by domestic players, and foreign investors really playing a much smaller role in the market dynamics. So I don't think that there will be a great impact, but it's something that we all have to wait and see.
What's been clear is that AKD wants to review that $3 billion IMF deal. This deal, some say, has been crucial to stabilizing the economy and could lead to further growth. What do you make of the possibility of that IMF deal being appended?
So I think just a clarification that even AKD did come a few weeks before the election and clarified that his stance on his party stance is not concerned or tungkol sa mga bumisita sa kanya sa nagamaligsa ng mahalanan ng kanyang conditions sa ambush interview sa mga mamamayan sa Naga, sinabi ng dating vice-presidente na kapag pinagpilihan ang lista ng mahalanan ng kanyang ransya, walang tinitingnan na kulay ang politika. Kapag kanyang ransya dito sa amin, wala namang kulay ng politika na tinitingnan. Walang partido o isa dito lahat. Lahat ng pumunta na ay welcome dito sa amin. Sa Nairobi, noong Sabado, na 21 ng Setyembre. Mula noong naging ang asawa ko na si Jesse Robredo noong 1998, ganito na. Every time na binisita ang naga na si Pinoy Sadla, very much welcome dito sa aming bahay. Dagdag pa niya. Matatanda ako na sina Senator Bongo at PILG Secretary Pedro Avalos ni Robredo noong Sabado para sa pista. Ngunit bago ang pagbisita ng dalawang opisyal, nauna nang bumisita si Vice President Sara Duterte kung Biyernes na 21 Setyembre. Paliwanag ng Office of the Vice President o OVP, inimbitahan si Duterte ng isang kaibigan sa likod upang dumalo sa Centennial Anniversary Mass ng Pinagpo Coalition ng Origin of Francia. Ang naturang kaibigan dito ay Vice-Presidente ang nag-organisa ng crash while kasama si Robredo. Subalit dahil sa pangyayari, si Kaliring at iba pang mga litawan ay iba't pamamuhon at nagdadali pa rin ni Robredo. Magkagayuman, ang kaganapan nito ay patuloy naman na umahay ng samot sa argumento mula sa mga personalidad sa social media. Ayon na kay Hindi ko alam kung matatawa ako kasi sinabi nila number 1 sinay, Boss Avalos, but Avalos still goes to her, for that Hernandez will shoot his pants at home. Wala daw politika pag kanyang franchise. Ay, salamat makakakain ako sa bahay niya. Ayon naman kay Tio Moreno, was in and political meeting, and then go went to meeting. Let's do this. Open record attorney Lenny Robredo.
Del John, talk to us about port activity in Sri Lanka. We know that back in 2018, it was a 50-50 contribution in terms of local and foreign. When do you expect to see that again?
They are only trying to use their supporters.
Sooner than later, I hope so. But you're quite right. I think if you look 2018 prior to 14 years plus years prior to that date, we historically had
this number
a
increased by
50-50
660,000
contribution
jobs,
from
bringing
our
the
foreign and
total to
domestic
15 million
point of view on turnover.
Over those 6
However,
years,
after
we
the
need to trust
2019
more than 600,000 plus people. That support will likely
that dynamic
continue to grow
changed
in the
quite a
coming
bit
years.
because a lot of the foreign
These
investors
senatorial
across the
aspirants are
country
eyeing their
over
sole base
macro
of 14
concerns.
million supporters,
And we
knowing
had,
that
I think,
securing
in
the support will
2021,
guarantee
the
them seats in
turnover
the
was
Senate.
dominated 95%.
Remember
by
how the
domestic
Liberal
players and
Party
95%
abandoned
foreign.
you after losing
That
your
trend has
control.
slowly but
Don't
surely
let others
become
take
like I
advantage
said,
of you again.
the currency
You are
standard was
incapable of
85
making
50.
terms better than you used by
Increased
opportunistic
activity
political players.
foreign investment
Honestly,
flows
sayang ko
over the
talaga,
last year,
you are a
18
good
months or
person
so. However,
associated with a
definitely
wrong
not back
political
to
party,
levels of
a party that
50-50.
hasn't brought
I think
significant
partly
change
the
to
reason
the
for that
Philippines when
is
they
that we
snatched the
are
power back from the
unable to
hands of a
restrict the
dictator.
default status.
You are
So you're
also
not going to have
unfortunate
foreign
to have
funds
rabid and ungood
organizations
supporters
being
like the
able to
Catholics.
allocate
Election is a battle of numbers.
to the country
The
by
best
using
thing to do
RP
is to be
status.
friends with
Now,
everyone so
I
you
think
can
one
get
thing
more votes.
the president
What Catholics did was the
inherits as
opposite.
he comes
They
in
think that by
is
calling
that he
names,
has
boycotting
completed
businesses,
debt restructure
disrupting parents,
both
shaming the poor
domestic
and
debt
illiterate,
as well as
and bashing
foreign debt,
those who
which
don't
last
share the
week
same
the
opinions with
government
never the right strategies to win elections.
reaching finalization
Sa
or
Mandala,
agreement
kitang-kita
in
naman
principle
na
with
pagbumisita ang
the
dalawang
international
kandidato ni Marcos
sovereign
kaysa
bond
sa mga
holders of
dilawan
commercial
kandidato
creditors.
tulad
So
ni
that
Kiko
completes
Pangilinan.
the entire restructure process.
Na hindi talaga nasa mabuting relasyon ngayon ang mga dilawan ni Lenny Robredo.
The incoming
Pero gaya nga ng sabi
added
ni Kiko,
advantage
tagal
because
sa
it's
batong di
inheriting
tayo tapos.
a government that
Ang
has now
issue nito
cleared
ay
itself
binigyan
from
naman ng
the
comment
COVID.
reaction
And
ng well-known influencer na si Mr.
very soon,
Milton. Panuorin ang full video para sa iba pang detalye
You're
sa
facing
bisimula
an
naman
optimistic
pagkatapos
view
ng
of the country, Dilshan. How optimistic are you the country can get to 3 to 5% this year?
very optimistic. We've recorded 5% growth for the first 6 months. I have no doubt that we will continue in that path and we will reach 4 to 5% positive growth for 2024.
Dilshan, thank you so much for being with us. Dilshan, we're a Sector Chairman at Colombo Stock Exchange. Plenty more to come. This is
Mukhang pinatamaan si Sarah sa kanyang bagong post sa kanyang Facebook. Iba na iba, meet and greet, si Sarah with Lenny Robredo nito lamang nakaraang araw kung mismo sa bahay niya sa Naga City. Kasabay din ito ng kamistahan ng Dinasasa. Pagkatapos nag-post agad si Vicky Ingay ng mga kaibigan na nakipag meet and greet sa kanya. Pero last month pa raw ito nangyari at doon sa Davao. Kaya ang tanong, bakit kahapon nang ito pinost ni Inday? Sa kainitan pa ito ng barkadula ng mga kakampings at yellow dahil nagpapatuloy daw si Vicky Sara sa mga kakampings. Ang sinabi na ayaw ni Brillantes mangyari. Anyway, please, let's all welcome the newest member of Inday Sara,
Asians at the forefront of some of the world's
Attorney
biggest
Lenny Robredo.
Sherrian in Tokyo.
Masayang
And I'm Heidi
ni
Strabo
Vice
here in
President
Sydney
Sara
with the trading day
noong
begins.
Sabado,
Right
dalawang
here in the
sa
center of
Setyembre.
the action
Ang
to get
kanyang
you set up with the
pag-ibig
numbers,
sa
news, and
sa
knowledge you
Inday
need
Sara
for
sa
the day
Francis.
ahead.
Sa kanyang Facebook post, nagpahagi si Duterte ng ilang mga larawan ng pagsipalayang
Join us on Bloomberg Day February. Weekdays only on
Masaya
Bloomberg
ako na
TV.
nakasama ang ating mga kaibigan sa Inday Sara Supremacy noong
Jumpstart your
nakaraang
trading
buwan sa
day
Davao
with
City.
2 hours of single stock stories that are driving the
Ang
opening bell
kanyang
action.
suporta sa ating mula pa noong kampanya ay hindi matatawanan.
Bloomberg Open
Ang
Interest
ating
weekdays
ay
at 9
nagmula sa
a.m.
iba't
Eastern
ibang sektor
only
at
on
lugar sa
Bloomberg
Pilipinas.
Television.
Dagdag niya. Pinayot din ng Vice-Presidente ang kanyang pasasalamat sa patuloy raw na suporta ng Inday Sara Supremacy sa gitna ng kanyang pagsisilbi sa Office of the Vice President o
And here's some of the top corporate stories we're following. TSMC and Samsung have reportedly discussed building new factories in the UAE to help satisfy soaring demand for AI
Maraming
computing.
salamat sa
The Wall Street
kwentuhan.
Journal
Nawalan
cites
ng
sources saying
pagmamahal.
executives of the
Mahal ko
Asian
kayo,
chip makers
dagdag pa niya.
have visited
Ang
the
issue
UAE
ito nga,
recently to
yan naman
discuss
ang komento
major
ng ilang
new
personalidad
operations.
sa social
The
media.
Middle Eastern
Ayaw
nation
namin
is aiming to
sa
become a
buhay.
regional hub and test the
Hoy,
ground.
Inday Sara Duterte last month
Elon
kayo
Musk's
sa Davao,
social
bakit
media
hindi
platform X has backed down and agreed to comply with court orders in Brazil. A judicial filing shows that X has finally appointed a legal representative as required. Sources also say it's blocked accounts accused of disseminating hate speech and fake news. It could end a months-long clash that resulted in multi-million dollar fines and a ban on the platform. And the market are keeping an eye on liquor stocks in China in particular. They're gaining on the back of Mountai's share repurchase plan. Shares of Chinese liquor makers rising. As Citi says, Quincha Mountai's share repurchase plan, its first ever, is a positive surprise. There you have the Quincha Moutai up 0.6%. We have Williamsburg currently up by 2.5%. Elevated cash return likely to attract more long-term investors in what is a volatile market. Also keeping an eye on Asian uranium as well as nuclear shares. Nuclear energy stocks following their overseas peers higher after Constellation Energy, which is the biggest US operator of reactors, said it expects 3 Mile Island to go back into services in 2028, and that's to feed the power need from Microsoft. Paladin Energy currently up by more than 6%. Source Energy surging more than 9%. Asian uranium nuclear shares gaining on that 3 Mile Island plant. In the market, in the broader market, this is how it is looking at this point in time. Asian stocks are inching higher. Take a look at where the gains are right now. CSI 300, China CSI 300 currently up by 7.1% gains to benchmark in the line city higher by 0.5%. Hong Kong shares are up by 0.8%. The MSCI inching higher for a 4th straight session. That is it from Bloomberg Market Asia, Horizons Middle East, and Africa is next. Do keep it here with us. This is
Diba? Ang problema sa inyo, yung politika nilalagay niyo sa utak niyo. Kilaks po tayo pag may time. Diba si Benny Robredo, ang kampo ni Benny Robredo na mismo nagsabi na wala naman silang pinag-usapan na politika. Personal matters. Ano ba? Lahat na lang ba talaga sa inyo? Personalan? Pati politika. Politika lang tayo, John. Diba? Politika lang. Huwag na natin personal yung lahat. Katulad ka ni Trianis. Si Moscasinos. Diba? Kasi nag-let's meet you, Sara, at saka si Lenny Robredo. Ano kung maging mga Lord? What's wrong with that? Okay na, di ba? Cute. Problema kasi sa inyo, dahil politika sa inyo, ang problema kasi sa inyo, pinag-personal nyo. And besides, okay, sige, kasi ikaw is nagsimula eh. Sorry ha, pero hindi nga naman lahat eh. Diba? Hindi nga naman lahat.
Artificial intelligence going to eat up the rest of the tech world? And where do you think the future of technology is going in Silicon Valley and elsewhere over the next 5 or 10 years?
I think that one thing we talk about when we talk about technology is we have this kind of monolithic idea with this, but actually technology is changing different industries in different cases in so many different ways. And if you think about the things, what was technology like 20 years ago before the iPhone, for example, and where it is today, the ability to have, answers in your pocket. Gen AI is going to make it easier to access more information faster. How do we think about those things, and where's that going to go, to be honest? I actually am very bullish on technology because technology is an underpinning. It's not its own industry. It is every industry, and it's actually going to increase productivity and actually make our lives better.
So do you think technology is still going to be centered in the United States, largely around the Silicon Valley area?
I think that what's amazing about what technology has done over the last 20 years also is that now you can start an app anywhere in the world. You can live anywhere. You can have AWS, and you can set up and not have to have a
systems administrator or a server that you have to build. Now it's made it so much easier with these tools to actually look at a problem that you have and solve it anywhere. And so I actually think that distributes the ability for us to bring technology together anything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance. Welcome back to the opening trade. This is Bloomberg Technology. This is the Asia Trade. You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Strikes across the Israel-Lebanon border intensify. Hezbollah launches more than 100 rockets, missiles, and drones towards northern Israel. The IDF also conducting extensive strikes. Stocks in Asia rise along China's stimulus hope. The Fed cutting rates as the growth slowdown worsens. After the Fed's double cut. Plus, we take a deeper look into the executives rising within the ranks of the Saudi sovereign wealth fund, the PIF, as they are courted by international investment managers. It's just not any unprecedented. I'm Shimona Versace in Dubai, and we will be bringing you up to speed on all of the geopolitical developments in the region with the airstrike on South Beirut happening late in the afternoon, killing key commanders of the Hezbollah and more tit-for-tat strikes between Israel and Hezbollah over the course of this weekend. But for now, let me just take your attention to markets, and what we are seeing is a more positive handover from Asian equities overnight. We had a cut on the agency, no doubt that's boosting some sentiment, even though we saw a bit of a pullback from Wall Street on Friday, with the S&P and Nasdaq pulling away from those all-time record highs. We're setting up for another major rate for markets. We've got the Fed's deferred inflation gauge, the PCE indicator to watch out for later in the week, GDP, plenty of Fed speak, and then switching over to Europe as well, PMIs to watch out for today, which is why we got the euro. You can see that the euro is trading around the flat line, and then of course the nickel side oil trend is back at $75 now, so again, regaining a lot of last week. And switching over to our terminal chart today, and this is just one of the ones that I want to highlight for you, given how much Fed speak is coming up. And you can see that one of the key data points that we're going to be watching out for this week is that GDP. This is actually the third reading, but the reason I wanted to flag it to you is because the reported GDP is still 2.9%, and you have to think about that in the context of the Fed cutting 50 basis points cut last week, and whether or not they will succeed at engineering a soft landing. So far, the data has held up, but of course there are lots of questions about whether this data can continue to hold up in the coming months, so that's something to watch out for this week as well. But switching back to our geopolitical news, the exchange of fire between Israel and Hezbollah has intensified. The Lebanon-based group launched about 115 rockets, missiles, and drones toward the vast areas of Israel's north on Sunday. Hezbollah said it was targeting military facilities in retaliation for electronic device explosions last week in Lebanon that killed at least 39 people. Hezbollah says its weapons were aimed at targets as far south as the Haifa area, about 27 kilometers from the Israel-Lebanon border. Israel in the West Bank after concluding that the news network's offices there were being used to incite terror. The Qatar-based network said that heaven authorities had asked Israeli forces raided its Ramallah bureau and ordered the office to be closed for 45 days, and justifying this morning as well we are hearing of further strikes of the IDF into southern Lebanon as well. So the escalation, this round of escalation going on between Israel and Hezbollah seems to be continuing. So for more on this, Hassan al-Hassan, Middle East Policy Senior Fellow at International Institute for Strategic Studies, joins us. Good morning to Hassan. There's plenty to discuss. Let me just start out with your assessment on Hezbollah and how much of a fatal blow with those multiple rounds of explosions, injuring more than 3,000 military operatives there. You had obviously the big airstrike Friday afternoon that took out Akil and other very senior commanders as well. How much of a fatal blow does this constitute for Hezbollah?
That has, as you noted, taken multiple blows. Much of its senior leadership has been wiped out in Israeli strikes, including the one you mentioned in Beirut that took out multiple senior commanders of its special forces brigade. And the major attack has obviously sown a lot of confusion and fear and disarray. But Hezbollah is not yet defeated, and it clearly retains the ability to strike back as it has attempted to show and demonstrate. The issue is that I think Hezbollah obviously has to maintain a level of response. It has to be able to be seen as being still in the fight. At the same time, I think the party that does not want escalation at this stage. It's clearly Israel that I think sees an opportune moment to attempt to degrade Hezbollah and push it north of the border in an attempt to create a wider buffer zone separating Israel from Iran. And so I think Hezbollah is in trouble. There is a high degree of confusion. It's infiltrated in the sense that operational security seems to be a massive challenge, and this has had major repercussions on the survivability of its leadership, but it's not totally defeated yet. I think the question is where Israel goes from here.
I'll ask you what you think Iran's calculus is, because for so long Iran has viewed Hezbollah as one of their assets, but also a strategic asset of deterrence in the region. But what we're seeing now is Hezbollah are getting dragged in to what could be a potentially very hot war. Does this put Iran in a more vulnerable situation, and that they will have to do something to protect one of their key assets?
That's right. The tables have turned in the sense that Hezbollah had traditionally acted and operated as Iran's major deterrent against an Israeli or a U.S. attack, meaning that Hezbollah was seen as the assurance policy that could hold Israel at risk. The issue, I think, now is that it's Hezbollah that's being held at risk by Israel, and so it's Iran that feels the need to protect Hezbollah and to act as somewhat of an insurance policy for Hezbollah. Iran doesn't want this escalation either, because I think it realizes that with the US firmly backing Israel, it simply wouldn't have escalation dominance. And I think that's partly why Iran has yet to respond, despite its highly bellicose rhetoric, to Israel's assassination of Hamas's political bureau chief Ismail Haniyeh. Iran simply doesn't have many options at its disposal at the moment. You'll see Iran-backed militias in Iraq escalating at the moment in order to deter Israel from a wider offensive in Lebanon. The Houthis will escalate every once and again. But again, the added effect of these minor escalations from Iraq and Yemen are somewhat limited, given where we are in this wider confrontation at the moment. And so, in a sense, Iran really, I think, has a limited set of options at the moment. And all it can do is try and remain in the fight, minimize the risk of escalation, and hope that politically it can wait till Netanyahu, there might be a change in government in the United States or in Israel, and that could end up changing the situation on the ground.
Yeah, let's talk about the United States. I just want to play a bit of tape from the U.S. National Security Council spokesperson John Kirby. This is what he was saying overnight.
We have been involved in extensive and quite assertive diplomacy. We are watching all these escalating tensions that have been occurring over the last week or so with great concern. And we want to make sure that we can continue to do everything we can to try to prevent this from becoming an all-out war there with Hezbollah across that Lebanese border.
So the U.S. wants to do everything they can to prevent this from turning into an all-out war. Can they? And do they have the leverage?
Well, certainly the U.S. definitely has the leverage over Israel, to be sure. The U.S.'s continued support for Israel is absolutely vital and critical for Israel's ability to continue waging war on multiple fronts. And obviously, in terms of munition, in terms of the provision of arms supplies, in terms of the protective role that U.S. assets in the region play, obviously U.S. support is absolutely critical. The issue is that I don't think that the Biden administration, or perhaps any administration, really has the political will to enforce these red lines and to restrain and to rein in Israel because of domestic political calculations. So ultimately, the United States as a nation, as a country, most certainly has the leverage. The question is there an administration, is there a president that's willing to utilize this leverage to rein in Israel, which clearly has been the main driving force behind the escalation. So I think it's a question of political calculus, more so for the administration, more so than a question of whether the U.S. as a whole has enough leverage to rein in Israel.
I thought it was quite notable last week when Hassan Nasrallah spoke that he explicitly made a link between what was happening in Lebanon and the developments in Gaza. He said, we are not going to stop launching the attack on Israel in the absence of a ceasefire. He said, unless Israel self-awarded Gaza and the West Bank, his words, of course. To what extent do you think the ceasefire deal unlocks the key to things de-escalating in the region?
Let's remember that the reason why Hassan Nasrallah, Hezbollah came into the fight in the first place was to demonstrate solidarity with Gaza. And this is obviously the idea of the so-called unity of fronts that Hezbollah, the axis of resistance, the Iran-backed axis of resistance has talked about, meaning that if one of the members of the axis of resistance, say Hamas or Hezbollah, enters into a conflict, everyone else mobilizes in Iraq and Yemen and elsewhere in solidarity. Israel obviously is trying to decouple the dynamics in Lebanon from the dynamics in Gaza. It's trying to bring Hezbollah to its knees, to get Hezbollah to want to negotiate a ceasefire independently of what happens in Gaza. And obviously, Hassan Nasrallah's words are a reminder that Hezbollah will remain committed to this unity of fronts, that it will only cease its military operations once a ceasefire agreement in Gaza is reached. And so I do think that a ceasefire still remains the single best, simplest solution for a wider de-escalation in the region. We've seen Hezbollah abide by the ceasefire that had taken place late last year, and they abided unilaterally by it. They ceased military operations in November, I believe, last year, when a temporary ceasefire deal was reached between Hamas and Israel. So I think there are multiple indications that if a ceasefire deal were reached in Gaza, then we would see a de-escalation across the Lebanese-Israeli front as well.
Yeah, that certainly appears to be the thinking. Hassan, always great to chat to you. Hassan Hassan, Middle East Policy Senior Fellow at International Institute for Strategic Studies. Thank you. So we will be speaking to Chief Market Strategist at Lazard Asset Management, Ronald Temple. We're going to be talking about markets, and he says no more outsized rate cuts in 2024. This discussion next. This is Bloomberg.
This year, Team Green hits the road to visit participants in Samsung's Solve for Tomorrow program.
It's a competition that encourages STEM students to develop their skills and ideas.
And it takes us to more than 60 countries. In Peru, one group uses old plastic to 3D print new medical devices.
Students in the U.S. enlist a tiny ally to slash landfill waste.
In France, young people here start body movement with an energy.
So get ready to meet the problem solvers tackling sustainability issues in their communities.
We can't wait to get started.
Yes, Mr. Speaker.
Yung iba medyo maliliit na no? Yung sa foreign investment.
Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
OJ or other authorities.
This is a as the economic picture. We're at the intersection.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Henry Hordern only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Simona Versace in Dubai. Chinese authorities may be preparing for more stimulus measures after the PBOC cut the 14-day repo rate this morning and announced plans for a rare briefing on the economy. It follows data from Friday reinforcing slowing momentum in the economy, and a separate Bloomberg survey shows analysts favoring a property sector rescue as the best stimulus option. So we are seeing a bit of a bounce in terms of risky assets in the handover from Asia Pacific, but of course the focus for markets last week was all on that Fed rate cut, 50 basis points in the end. So to analyze the market reaction and also the Fed's thinking from here, let's bring in Ronald Temple, Chief Market Strategist at Lazard. Great to have you with us. So was the Fed right to cut by 50 basis points last week?
I think they were. In full disclosure, I did not think they would cut by 50. Right. I saw the market was pricing.
Well, the market was pretty split.
It was good, and I genuinely believe when they went into that meeting, there was probably a lot of debate where they were trying to figure out the right call, where historically, they've already decided what they're going to do with the so I think it was the right call. It was an insurance policy because inflation had come down sufficiently. They probably should have started in July, and I believe this is catching up. But more importantly than the cut, I think was the messaging around the cut. Jay Powell really needed to make sure the market did not think that something was wrong. And he reiterated repeatedly how strong the U.S. economy is, which I agree. But again, made it clear that they were recalibrating, a word used quite a few times.
So it's funny because the day before the day of the Fed meeting, we had a guest on the show, and one of the questions I asked was if they opt for the 50 basis point cut, is the market going to interpret it as he said, seeing data as a lot worse than the rest of us? So they know something that the rest of us don't know. Will they read it as something that could be quite negative and foreboding for the economy? And in fact, what we saw was a very bullish market reaction to that 50 basis point cut. And do you point that down to purely the messaging afterwards and the fact that he said, look, don't get used to these type of jumbo rate cuts because we are to be cautious?
I think it was interesting because the day of the cut, the markets were a bit wobbly. And it was the next day after people got a chance to sleep on it. I think they woke up and said, this is a good thing. I mean, there were really three reasons not to do 50. One was the fear of scaring the market. The other was the fear of admitting you're behind already. And the third was the risk of appearing political. And I think they managed all three of those in the messaging. And I think for the markets had time to to digest this. What's interesting to me about the market reaction, by the way, is the Fed's summary of economic projections, the dot plot, basically showed very clearly that 7 of the Fed members, I believe, had one more 25 basis point rate cut by year end. 9 had 2 more 25 basis point rate cuts. The market is still pricing 3.
Yeah.
And only, I believe, one person had 3 rate cuts by the end of the year. So the market listened to Jay Powell and the messaging of the strong economy, but is ignoring him and the rest of the Fed in terms of them saying, this is not the new normal. We're not going to be doing 50 a time every meeting.
Does it really matter, though? So that the markets are pricing in an extra 3 if they end up cutting only once more. Does it actually matter for these stock markets? We're sitting close to record high.
Great point. I mean, from an economic perspective, 25 versus 50 doesn't move the needle that much. What's more important is how far will they go in the full cycle? And the market is still saying you're going to get another 183 basis points by the July 30th meeting.
I think that's too aggressive. The Fed, again, their own summary of economic projections says they're going to stop around 3.25 to 3.5. That's been my view for quite a while, is that's about the trough of this rate cutting cycle. And the reason I believe that, by the way, is the economy is strong. So you're going to go from restrictive territory back to something more neutral. I don't think the Fed's going to need to go into accommodative policy or trying to stimulate the economy. So in that regard, I think it does matter, because if the market's expecting all of this stimulus from the Fed and we don't get it, maybe there's a little too much optimism there.
At what point does it, I mean, you mentioned the elections coming up, and obviously that's huge, a huge political event, but at what point are markets going to go back to focusing on the size of the US deficit once more?
Well, I think the size of the deficit is a problem regardless of who wins. Neither candidate has really sketched out a credible plan to significantly reduce the deficit. And I do worry, it seems at this part of the campaign season, increasingly it's a competition to see who can hand out more money, right? Kind of typical politicians. The forecast for the next decade from the Congressional Budget Office is deficits every year of at least 6% of GDP. And by the way, if you adjust those for the tax plans they've announced, it's probably 7% or greater. It's not sustainable. One of my worries is it's hard to predict what will cause that to break, but at some point it probably will. One worry I've had is Donald Trump has talked about decreasing Fed independence. At one point, he speculated maybe the Fed should have to get presidential approval to make rate changes. He's talked about firing Jay Powell. That could be a tail risk in markets. I don't think it's likely. I think it's low probability. But maybe that's one of those things that could actually really rattle the markets. If you have these large deficits and there's a perception that the Fed is no longer independent, that's very worrisome.
Does that mean then, putting everything we've discussed together, that the steepener, the yield curve steepener, is still the wise trade to have on right now? You've got the shorts on the long end in anticipation of these wider deficits, but then you're long the front end in anticipation of the rate easing cycle.
Yeah, my view of fair value on the U.S. 10-year Treasury is it's probably got a 4 in front of it, not a 375. So I do think betting on higher yields at the long end of the curve makes sense. So I've been negative on long duration for some time now. Prefer to be in that kind of 3 to 5 year part of the curve, preferably in credit. And it's hard to say that. I feel like I make a face when I say it because credit spreads are so tight. But, I think recession risk is low when you're getting that yield pickup without taking the duration risk. And the longer the U.S. keeps running these deficits, the more there's got to be upward pressure on those long end rates.
And what do you see happening with the U.S. dollar here? Because it's not just the Fed cutting. You have central banks all around the world cutting it. Is it a race to the bottom?
Well, in my view, currency rates are all driven by changes in expectations of interest rate differentials. The market is expecting too many cuts, in my view. So that argues that as the market recalibrates, if I'm right, that you get fewer rate cuts, which means a stronger dollar on the margin. And then the election really does matter in this regard. And historically, I've told people not to lose too much sleep over U.S. presidential elections because one person can't steer a $28 trillion economy very vigorously. But in this case, Trump has talked about major tariffs on all of the trading partners of the U.S., which could increase inflation rates in the near term, decrease the Fed's ability to cut rates, and further strengthen the dollar. So I think the election may well be important to the move of the dollar. But near term, I think a little bit more strength. Longer term, structurally, I'm more negative on the dollar because of those deficits we just talked about. It's at some point you have to be more fiscally responsible.
Well, like that, the narrative is complete. Ronald, thank you so much for joining us today on the show. Ronald Temple, Chief Market Strategist at Lazard. Well, coming up, the Danish Prime Minister is welcoming Europe's shifting tone on migration. We hear from Mette Frederiksen on what her government is looking to achieve. Next, this is Bloomberg.
Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day. Market moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Welcome back to Horizons Middle East and Africa. I'm Shimona Bersachi in Dubai. Danish Prime Minister Mette Frederiksen says it's right that other governments in Europe are shifting their tone on the need for more stringent migration controls. Frederiksen told us exclusively why she thinks the issue should be a top priority.
It is changing a lot. Finally, thank you, dear colleagues. We should have changed the rules and the legislation in Europe a long time ago. It is actually because I am a social democrat that I'm quite tough on migration, and of course especially on irregular migration, because if too many people from outside Europe enters Europe, the problems with a lack of integration will simply be too big and too massive. We have to be, unfortunately, quite tough on migration. We have to be in control with our external borders. We have to be able, as leaders, to say if people come to Europe and if they commit serious crimes, then we should be able to tell them to leave Europe again.
That was the Danish Prime Minister Mette Frederiksen speaking to our colleagues at Bloomberg. And a quick look at markets before we head to the break. What is going to be yet another pivotal week as markets digest that Fed interest rate cuts and also a PBOC rate cut in the reverse repo rate, the 14-day reverse repo rate overnight, setting the tone. As you can see, as we head into the European session, S&P futures, NASDAQ, they're pointing towards the green, up 0.6% higher. The Eurostoxx futures in Europe also pointing to a higher open, up 0.5%. Keeping a close eye there on some of the political developments with Michel Barnier, the French Prime Minister, announcing the composition of the government there, and then also a win for Scholz's SPD party in regional elections in Germany. We're going to talk more about that on the show in a short while. But that is the picture as we head to the break. Coming up, the UAE president is on his first trip to Washington as the country's ruler. More on what is on the agenda next. This is Bloomberg.
The top names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. You know, not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry. Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
Might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
This year, Team Green hits the road to visit participants in Samsung's Solve for Tomorrow program.
It's a competition that encourages STEM students to develop their skills and ideas.
It takes us to more than 60 countries. In Peru, one group uses
Worsens, global equities also buoyant after the Fed's jumbo cut. Plus, we take a deeper look into the executives rising within the ranks of the Saudi Sovereign Wealth Fund, the PIF, as they're courted by international investment managers. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai, getting you up to speed on some of these markets today before we talk about some of the other developments that we're watching in the region. But for now, markets are trading in the green. We had a positive handover from Asia this session after that PBOC rate cuts came through. And even though Wall Street slightly ended in the red on Friday, we are talking about pulling back from all-time record highs once again for the S&P and Nasdaq today. You can see a lot of green on the board as well. Brent also about 0.8% higher. It's been steadily climbing back higher over the course of the last 2 weeks, given all of the geopolitical developments in the region that's underpinning where energy is trading. But you can see that Brent is now back to $75 a barrel. And then the euro trading sideways today at 111. Focus later on some of the PMI numbers coming out of Europe, in addition to, as we spoke about, some of those political developments with Michel Barnier announcing his French government, the composition of the French government, and the huge task ahead to rein in some of their deficit spending. Switching over, I also just want to draw your attention to some of the data that we have this week. We're going to get plenty of Fed speak. So the members of the Fed are now able to go out and deliver these speeches and do these interviews. So we will get a lot more color about how the Fed came to that 50 basis point cut decision. But later in the week, we will have the PCE, which is the Fed's preferred inflation gauge to watch out for. And then we also get a revision of the second quarter GDP. It's actually the third reading, and you can see from this is that it's still tracking around 2.9%. And so yes, we talk a lot about the deteriorating economic backdrop in the US, but if you look at the most recent GDP numbers, they're still pretty lofty. 2.9% is where we're at. And granted, it is a backward-looking indicator, but when you talk about the Fed and how much incremental easing, loosening this economy may need, 50 basis points cut juxtaposed with that seems an interesting move, so something to bear in mind. All right, let's turn to Saudi Arabia and its sovereign wealth fund, which is a key vehicle driving the kingdom's plans for economic transformation. As the PIF focuses on domestic investments, it's grooming a once low-profile executive to manage deals with international firms looking to invest. Yazid Al-Kumayet, who is one of the fund
Kung itong mga nakaupo na to, hindi tinatanong yung 833 million na pagwaldas ng confidential funds.
Yazid Al-Kumayet, who is one of the fund's 2 deputy governors and runs its Middle East and North Africa unit, regarded for years as the less glamorous arm. Well, now that's changing. For more, Matthew Martin, our senior reporter, formerly 12 funds in Riyadh, joins us now. And it is a public holiday, so thank you, Matthew, for making the time for us to talk us through your very interesting profile piece today. The question I want to ask you is, what does it tell us about the PIF's priorities that they're choosing the deputy governor who has direct responsibility for Middle East and North Africa as one of the rising stars?
Yeah, I think, if you cast your mind back to 2018, 19, and 2020, this is a time when the PIF was spending tens of billions of dollars on these really big, high-profile international investments. And that was really the time when, the PIF international reputation was rising. People were getting to know more and more about the fund. It was seen very much as, all of the money was going outbound. Now, what we see, and, the PIF is on record as saying that the bulk of its investments are actually going to be going domestically. The focus is on trying to develop the Saudi economy and trying to attract businesses in that the PIF will partner with to invest inside Saudi Arabia. So Deputy Governor Yazid Al-Kumayet, his group is now rising increasingly in prominence. We saw that earlier on in the year when he was the person who was signing this $5 billion check that the PIF wrote to BlackRock and to Larry Fink for BlackRock to come and develop their business inside Saudi Arabia. And we're expecting that, this is really going to be, he's going to be the character who is really behind cementing and developing more of those types of partnerships with international businesses as the PIF pivots away from a lot of the money going outbound into focusing on investing inside the country.
One of the quotes that jumped out to me from your article, Matthew, is a remark that he made last year where he said foreign outfits should set up not just their reception desks, but their kitchens. So again, it tells you a lot about what Saudi Arabia are trying to achieve here. But let's also ask about what this means to their international portfolio, because in the past year, they can point to several successes. And of course, global stock markets, we were just talking about that, going from strength to strength. The investment in Newcastle seems to have paid off as well. So how should we view this new refocused ambition with what is happening with their international portfolio?
Well, the PIF insists that, international deals are still going to be happening. They're still going to be a big focus for the fund. They say that they're going to be investing $50 to $70 billion a year, although the bulk of that is going to be going locally, then, there's still going to be several, at least $10 billion, perhaps more, of capital that's going to be invested externally. And so, we're still going to see those big international deals happening, but the focus clearly is going to be on Vision 2030 and on making sure that Crown Prince Mohammed bin Salman, who's the chairman of the PIF, his vision for developing and diversifying the Saudi economy by 2030, that those goals are met. And the PIF is going to be the big driver, the big source of capital for making sure all of that happens. And so we'll see the PIF develop some of these local entities. So even though some of those will be investing abroad, they will be investing through this MENA group, which sits under Deputy Governor Yazid. They will be investing abroad with a goal of bringing businesses and bringing talent back into Saudi Arabia. So we're still going to see the PIF do things internationally, but there's going to be an increasing focus on doing things internationally that will benefit the Saudi economy.
Yeah, and Matthew, given how closely you track the wealth funds in the region, not just PIF but others, how do you think they're thinking about this 50 basis point rate cut out of the Fed for Friday? What does that unlock for them in terms of opportunities?
Well, I think there's a couple of things in there. I think the big thing has been over the past few years, and we've talked about this in the past, is that because of high rates, because of the impact that's had on some of the big asset allocators in places like the US and Europe, it's meant that they've pulled back to some degree from contributing to new fundraise and new deals that have been going on. And so the Middle East wealth funds have really stepped into the gap, and they've stepped into that gap and also had some demands as well about what they want to see the likes of the BlackRocks and the Apollos doing for them in the Middle East. Now that those rates are coming down, we might see some of those big pension funds in the US becoming more active, which means that there'll be the wealth funds will be a less important part of the overall sort of global capital sources. I think the other thing, of course, that we'll see is that it's got a lower cost of capital for everyone globally. So the Middle East sovereign funds, a lot of them are not so much sort of debt funded; they're funded from oil revenues from the government. So this doesn't affect them. It's more in the fact that it's going to boost those sorts of animal spirits in markets, which they're going to be trying to go out there and take advantage of when they can. And we've obviously seen them already being very active over the past few years in terms of investing into stock markets. And so, now the question is going to be, will they, over the next few years, the investments that they have been making, are they really going to make big returns as they come to fruition in the next 3 to 5 years?
Yeah, always going to be a big question. Matthew Martin, thank you so much for joining us today, our senior reporter for Middle East Wealth Funds in Riyadh. And for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. The newsletter comes out around 4 p.m. Dubai time on Mondays. Now, the UAE president is on his first trip to Washington as the country's ruler. Sheikh Mohammed bin Zayed is set to hold discussions with President Biden and Vice President Kamala Harris and meet with executives of large U.S.-based firms. While the leaders are likely to discuss the developing conflict in the Middle East, a UAE diplomatic advisor says the talks will prioritize economic ties. So for more on this, Abir Abu Hamad, Bloomberg's Middle East economics and government reporter. Thank you so much for joining us on the show today. Interesting timing for MBZ to be paying this trip to the U.S. now. It's not that long until we've got U.S. elections. Why is he paying this trip? And I believe it is his first official trip as president.
Definitely, Joanna. So, and we were at that briefing with Anwar Gagash together, and that question was the first question that came up about the timing, right? So I just want to point out that economics on top of politics seems to be the UAE's unofficial mantra lately, where, the UAE, throughout their multiple economic agreements with new countries in Asia, in Latin America, in Africa, seem to be putting the economic agenda ahead of politics. And that was certainly the message that Anwar Gagash had sent, right? MBZ is starting his trip to Washington today to meet with President Biden, Vice President Kamala Harris. As you mentioned, the main purpose of the trip is going to be to discuss the UAE's bilateral trade, the UAE's economic agenda, to discuss AI. AI came multiple times during the briefing where Gagash is not going to be discussed. Granted, the UAE's sort of unofficial role in the conflict in the region between Israel and Hamas is going to come up, but it's not going to be the priority. Now, in terms of the timing, Anwar Gagash sort of played it off. He just said, you know what, this is the president's first official trip to the United States as ruler of the country. He's met with Biden and Harris times before, but this is going to be the first time he goes to the U.S. in the capacity as the ruler of the country.
Yeah, you've got to wonder as well whether a visit to former President Trump is also on the this week. We don't know yet, of course. Given the focus for artificial intelligence, and I was actually at one of the AI conferences over here in Dubai last week, it has been a huge focus of the UAE government, and also a lot of focus on G42. They've inked many deals with Microsoft earlier on this year, and then also potential talk about some form of a partnership in NVIDIA as well. What are we likely to hear from this trip on that front?
Right. So, in terms of the NVIDIA deal that came with G42, it actually came on the same day as the briefing. So we had a news flow of hearing about the UAE's goals in the wider AI industry. And so the NVIDIA deal with G42 is essentially creating an Abu Dhabi-based climate tech lab, which is going to focus on more sophisticated ways to forecast the weather and the climate using NVIDIA's Earth 2 product. Now, We don't have a money sum attached to this, but we know that, Semaphore reported earlier, Giovanna, a couple of weeks ago, that the US had approved the sale of chips from NVIDIA to G42, which might be big news if true. We know that G42 had a deal with Microsoft, and one of the biggest sort of government-to-government negotiations in that deal was for G42 to pair all existence in China. So this is a sticky point, right? The whole US-China trade tensions and how the UAE and other countries are caught in the middle. So the UAE has, or G42 has agreed to pair all existence in China to be able to secure those kind of deals with Microsoft, with NVIDIA, and we're seeing that happen. So it is going to be a big part of the president's visit, and it's going to be part of the primary discussion.
And it also underpins the conversation that we had with the advisor last week, where he was saying that the two main goals right now for the UAE are developments in artificial intelligence and big focus on climate tech as well, given global warming. So it is a priority, of course, for leadership there. So interesting. Abir, thank you so much for the preview on what to expect out of MBZ's visit to the US. That was Abir Abdelhamid. Now, coming up, Olaf Scholz says Social Democrats hold a slight lead over the far right in the latest German state elections. We're live in Berlin. Next, this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
DOJ or other authorities.
Who face bigger challenges next?
What's going to keep me welcome? This is
As the economic picture.
covering the intersections of Hollywood.
Bloomberg loves earnings.
I know it's like your Super Bowl,
I
right?
can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jemima Versace in Dubai. In Germany, Olaf Scholz's Social Democrats have held off the far right in elections in the eastern state of Brandenburg, according to preliminary results. A win would spare the chancellor and his party from another embarrassing electoral setback. Let's bring in Bloomberg's Olivia Crook, who joins me from Berlin. So just talk us through these results. Was the SPD expected to actually clinch victory and hang on to this particular state, or were people expecting defeat similar to what we got back in Thuringia a couple of weeks ago?
So listen, looking at the polls going into this election, it was the AFD that was leading by a couple of points, but it was very, very close. And the reason, Jumana, this is such a sort of critical part of Germany, and this is the state of Brandenburg, which is this sort of area that goes all the way around Berlin, but this has been a very safe SPD Social Democrat territory since the reunification of the country in 1990, right? They have held this part of the country since then uninterruptedly. So if they were to lose, and particularly lose to a category of political party, the AFD, and this chapter chapter of the AfD is considered by German intelligence services to be an extremist right-wing group, that would be obviously hugely significant. The fact that they have not lost it, they only won it by 2 points, however, is yes, some reprieve from Olaf Scholz, but it is not perhaps, it's not the worst case scenario, but it's not entirely good news. They're still only 2 points ahead. And it's also Olaf Scholz's own sort of home constituency of Potsdam. This is an area where the economy's been doing a little bit better. That may be part of the reason. Brandenburg's been growing at about 2.1%. That's the number 2 in all of the sort of areas of the country. But when you look at the national election, which, by the way, is a week and a year away from right now, you have to look at the sort of soundings of nationally that really you do not see the SPD doing very well at all. You see the CDU as sort of the number 1 party right now. And number 2 right now is the AfD. So there's going to be a question about how can Scholz turn this around. When you look at the rest of the coalition, Jumana, both the Greens and the FDP didn't get enough votes in the Brandenburg election to even be in the local parliament.
Wow, yeah, definitely something to bear in mind. We're only about 12 months away. And of course, other pressures are mounting on the government, not least the whole Unicredit Commerzbank situation. But let me just bring it back to Brandenburg now. How much did the question of immigration once more get factored into this particular election?
Yeah, Juman, I think that this has been a sort of major issue for German politics over the last couple of years, and it's one that is only sort of exacerbated as the economic situation starts to degrade somewhat here in Germany, to the point where you have a very sort of open coalition government of the Greens, the FDP, and Olaf Scholz, the Social Democrats, who are beginning to crack down a little bit on immigration, in part due to these sort of forces on both the far right and the far left that are sort of forcing them into those kinds of decisions. We saw them install, for example, border checks on all 9 of their land borders last week, including the border with Denmark. And we caught up with the Danish Prime Minister, because when you look at the sort of number of immigrants and refugees that Germany has, right now it has one of the highest levels of refugees it ever has had in its history. It's about 4% of the population, about a third of those from Ukraine. But speaking to the sort of Danish Prime Minister, this was interesting because she is also a social democrat, but he gives a very sort of different view on how to deal with immigration. Have a listen to what she had to say about how the tide is changing in terms of European policy towards immigration.
Yeah. And actually, we played some of that interview a short while ago, Oliver, exactly when she made those comments. So thank you for bringing us that interview as well. Super fascinating to see how the shift in sentiment is moving in Europe these days. Bloomberg's Oliver Crook. Meanwhile, in France, Emmanuel Macron's newly appointed French government is under pressure on multiple fronts, raising the risk of a swift collapse. Prime Minister Michel Barnier's cabinet needs support from the conservatives and centrists, who have not always worked smoothly together. The left-wing party holds the largest number of seats in the lower house, but was of Barnier's cabinet. And coming up, Zimbabwe's 6th attempt at a stable currency in 15 years is facing fresh challenges. We have the details next. This is Bloomberg.
Awesome.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more. It might shock some of your viewers. You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Matlock, and this is The Pulse, every weekday only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Zimbabwe's central bank is considering using the country's reserves to protect the gold-backed currency against severe market disruptions. The governor is also pledging to maintain a tight monetary policy stance to ensure exchange rate stability and durable inflation. For more on this, Bloomberg's Andira Uganda joins me now from Kigali. Andira, first of all, just walk us through what this central bank is proposing, why they have come to this decision, and also how stock markets have reacted there.
Jumana, so the central bank is attributing this depreciation to a demand-supply mismatch in the market. They're saying that the farmers are gearing up for the planting season, hence there's high demand for the dollar in the market. And this leaves a large supply of the local currency in the market. This money is ending up in the stock market. And that's the reason why we are seeing this surge. Since late August, the all-share index has risen by 28%. And this yo-yo effect is nothing new in Zimbabwe. If we go back to 2023, they were home to the world's largest rally at 800%. This was a time when consumer prices were over 100%. The currency had lost nearly 80% of its value to the dollar, and nobody was accepting it in terms of transactions. So again, the stock market became an alternative place to hedge this money against inflation and volatility. However, 2024, they launched a new currency, the ZiG, and again, 330% of market value is wiped off, leaving investors to deal with the fallout. And this currency is their sixth attempt at a functional currency. And though it started quite well, it has lost consecutively to the dollar for the last 18 days. The central bank understands this, likely to keep the monetary policy tight, but also they've injected $64 million into the market to try and mop up excess liquidity.
And of course, this isn't a specific issue. FX volatility is not a specific woe that is unique to Zimbabwe. How are other African countries coping with this, especially in light of the most recent hiking cycle out of the Fed? Of course, they started cutting down.
Jumana, you're absolutely correct. If we look at Nigeria, the outlook for the Naira is very fragile. When President Bola Ahmed Tinubu came into power, he introduced a raft of reforms with liberalization of the FX market. They also removed subsidy on things like fuel, and this caused socio-political tension in the country. So the government has been slow on reforms, and then the problems have been exacerbated by the prices of oil in the international market. And Oxford economics say that the bone of the contention hit the Naira was never allowed to adjust at its real value. Hence, it went from being overvalued to being severely undervalued. The same applies to Angola. Their currency has lost nearly 12% of its value to the dollar. But then again, this is an economy where 60% of its budget comes from oil, and the international prices are not helping. The central bank will not intervene. They say it's immature, and they have to keep servicing their debt. Zambia is also having quite some issues. They've gone through a national drought, and they're depleting their resources on imports of food and energy. And so their currency is also likely to remain weak because copper prices in the international market are not doing very well.
Fascinating. Andiro, thank you so much for bringing us the latest on Zimbabwe and other countries around Africa as well, what they're trying to do to support their local currencies. Okay, well, a quick look at markets before we head out for the day. And equity futures are pointing towards the green. We had that PBOC reverse repo rate cut at 10 basis points coming through overnight. So that's lifting Asian equities, and you can see that's also having an impact on equity futures here, S&P and the Nasdaq seen opening up in the green. Euro Stoxx futures also up 0.5% as well. And a quick look at oil too. We have spent a good part of this show talking about the geopolitical developments in the region. You can see that Brent is up 0.8% today as it factors all of that in. But that was Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for today. This is Bloomberg.
make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioning.
By strategically adding and shedding assets, General that expansion dovetailed with the boom.
U.S. pet feeding and treating is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of it? We so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
Humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feed, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets, take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. China presses the button on more stimulus. Asian stocks and US futures rise as the central bank cuts a short-term policy rate, with investors hoping for more from a rare briefing tomorrow. Scholz dodges defeat. The German Chancellor's party scrapes a win in his home state of Brandenburg, narrowly holding off a surge in support for the far right. And Michel Barnier's cabinet appointments sparked discontent from across the political spectrum, putting France's new government at risk. That as the French PM dangles the prospects of tax hikes to cut the deficit. So China coming through with additional stimulus, cutting those short-term rates. And here's what's important for investors looking ahead to that briefing from key regulators tomorrow. We'll break down the China story for you and how that's tying in to optimism across these markets. US stocks ended the week in positive territory. It's a week of gains. European stocks were modestly lower by the close of play on Friday. Currently, this is the setup then. European futures pointing higher by around 0.4%. Here in the UK, the FTSE 100 looking to add around 27 points. The S&P in terms of US futures pointing higher by around 0.3%. NASDAQ futures also in positive territory, looking to add 111 points. Let's pull up the boards and look cross asset then. We've been hearing from Chris Waller of the Federal Reserve, keeping the door open to another 50 basis points in terms of the cuts from the Fed at the next 2 meetings. Certainly traders are expecting at least one of those meetings to come through with another jumbo cut. You're seeing 70 basis points move lower in terms of the cuts being priced in by these markets at this point. In terms of cross asset then, euro dollar at 111. We're looking as well at what's happening in the oil space with the concerns about the tension between Israel and Hezbollah, and oil currently in positive territory, up 0.8% so far in the session at $75 a barrel. Gold at a fresh record at 2,629, adding 27% year to date. That's the gain. Bitcoin also in positive territory at close to 64,000, up a full percentage point. Let's check in on the Asian markets. A positive session there as well. Japan closed for a national holiday, but the focus very much on what is unfolding in China, stepping up the support after data suggesting again in the month of August the challenges around the world's second largest economy. The MSCI Asia Pacific then, that's the regional benchmark, adding 0.2%. On the mainland, the CSI 300 adding 0.6%. The Hang Seng Index over in Hong Kong up 81 points, and the Japanese yen softer again, potentially heading to 145, 144 after Governor Ueda suggested he is in no rush to push ahead with further rate hikes. That came in through, of course, the end of yesterday at that BOJ press conference. Let's cross over right now and check in on the details around China. Cross over to Hong Kong, where China has announced those plans for a rare briefing by the PBOC governor on Tuesday, following the central bank's move to cut one of its short-term policy rates, as I mentioned. For the details and the market reaction, let's bring in Bloomberg's Min Lo in Hong Kong. Min, what do we know about the measures being pushed through by the PBOC and what to expect tomorrow?
Yeah, we don't know yet. Well, it's quite a surprise announcement that the PBOC Governor Pan Gongchen is going to hold this special press conference tomorrow with a couple of other officials from the National Financial and Securities Regulatory Commission. And the topic at hand is to look at financial support for the economy, and certainly markets are pricing in a lot of expectations right now that maybe those stimulus that traders have been hoping for could be announced as soon as maybe tomorrow. If you look at the 10-year government yield, that's down to a fresh record low of 2.03%, suggesting that traders may be expecting rate cuts. And this comes after we had seen the PBOC announcing a surprise rate cut to the 14 days reverse repo rate by 10 basis points from 1.95% to 1.85%. But look, some analysts are saying don't read too much into this, because it could just be a catch up with the 7 days reverse repo rate cut back in July. And remember, the PBOC did not move the 7 days reverse repo rate today. And it's not unusual to cut the 14 days reverse repo rate before a long holiday like the Golden Week next week. The last time China did that was back in February, ahead of the Lunar holiday as well, and the intention is to ensure that market liquidity remains ample during that long holiday. We had some disappointing data that came out on Friday, the record high youth unemployment rate, fiscal spending lagging as well, and that's why perhaps we're seeing the government finally responding to calls for more stimulus measures.
Okay, Bloomberg's Min Lo in Hong Kong on the expectations around that briefing tomorrow from Chinese regulators and the move to lower some of the rates at the short end, at least for the PBOC. Min, thank you for the details. Let's get more in terms of the market reaction. Bring in Bloomberg M-Line strategist Mark Cranfield. Mark, talk to us about the market reaction to the data. Is it justified? We've seen time and time again that policymakers have edged towards rhetoric around more stimulus. More measures have been put in place, but in terms of pulling out the big bazooka, they've been reluctant to do that.
But of course, they're also getting a helping hand from the Federal Reserve by lowering interest rates as they did last week. And that may well be why the central bank in China brought forward this move in the 14-day repo. It was likely to happen because they're trying to target shorter term interest rates as being their main way of conveying to the market what they want to do with interest rates. So 7-day and 14-day repo are going to become their main vehicles for telling the market how they want to change policy in that respect. They've got a couple of things they're trying to do here. One is they're trying to restrict the strength of the Chinese currency. They can't do much about dollar yuan. If the dollar is going to be weak anyway, the yuan will gain. But they can help to keep it as an underperformer against its regional peers. And we saw the fixing today. Once again, they pushed back a bit on what traders were expecting, particularly in terms of the rate against the offshore yuan, which is where a lot of the speculative trading takes place. So that's one move. They also want to steepen the bond curve. That may well be what the meeting tomorrow is going to be about. They want to show people they're going to be more active in the Chinese bond market. They've been pretty uncomfortable with this idea that very long-term yields are coming down almost in parallel with short-term yields. They would much prefer a steeper yield curve, a normal shape of curve that we have in most parts of the world. And the PBOC may well tell us more about how they're going to achieve that. Could be more intervention in terms of their day-to-day activity at the long end of the market. So that's something to watch out for tomorrow. Now, the byproduct of this is that equities in China can probably start to enjoy a bit more health. They've been in a terrible situation, underperforming everybody. But if the Fed is helping to lift the mood for risk assets across the world, maybe even China can get involved if the PBOC shows that it's acting as well.
Maybe even China. Yes, SI 300 currently up just 0.6%. Maybe a turnaround for Chinese equities. What about the data? On the data front out of the US, the PMI is out later today, called stateside, Mark. Are we expecting this data to kind of confirm or at least give some support to this Fed move? How much sensitivity is there in markets to this data later?
Well, I think the way that investors are going to look at this is if the data comes out anywhere near expectations, it is going to show that the Fed didn't need to do 50 basis points. So that's going to add fuel to this very good mood that you've seen in markets. It's a very positive risk environment. So we're going to get the manufacturing PMI, which will probably be a slight improvement on the previous round. And we're going to get the services PMI, probably still showing a number around 55, something like that for the composite numbers as well. Now, these are not economic, so the risk mood is already good. And if you see what's happening there and we get numbers in the PMI that reconfirm that the American economy is in pretty good health, then you're just adding fuel to the fire, basically. So this could be a very positive start to the week. The rest of the world is already in the green. We're having a good day in Asia, even without Japan. The currency market is in pretty stable health as well. Bond market is fairly calm. So once again, it could be yet another trigger for more good news in the equity market.
Okay, Bloomberg M-Line strategist Mark Cranfield with an optimistic take on how the markets could unfold in the hours and days ahead as we look at green on the screen. Mark, thank you very much indeed. And the PMI data out of the US later today, of course, which will break for you. Now, a busy weekend for European politics with the new French cabinet unveiled late on Saturday. Meanwhile, in Germany, Chancellor Olaf Scholz narrowly avoiding defeat in state elections yesterday. We're going to get the details of the results from Brandenburg with Bloomberg's Oliver Crook joining us out of Berlin in a moment. Before we go to Ollie, though, Caroline Gonner is standing by in Paris. Caroline, talk to us about the cabinet makeup and the difficult choices this new government is looking to implement.
It may actually sound quite surprising after 2 weeks struggling to form a new government. Michel Barnier ended up picking a 33-year-old to replace Bruno Le Maire as the new economy and finance minister. His name is Antoine Armand. He belongs to President Macron's party, Renaissance. He was only elected MP back in 2022, then re-elected during the snap elections in July, and then heading the Economic Committee of the National Assembly. So very little experience for a huge task, which is to restore, of course, France's public finances. The deficit of France could reach as much as 6% of GDP this year, which is double than the 3% target that Macron wants to reach by 2027. French debt is at 3 trillion euros, a very grave situation, according to the Prime Minister Michel Barnier, who was on TV last night, saying again that it doesn't exclude raising taxes for some multinationals and for the wealthiest individuals. Other figures in the government include Bruno Retailleau, Interior Minister, Jean-Noël Barrot, promoted Foreign Minister, but that's assuming, of course, this government survives a possible vote of no confidence.
Yeah, and that is a key assumption, isn't it? And we know the challenge is certainly there for this cabinet. Bloomberg Caroline Gonner on the latest out of Paris in terms of the makeup of the new French government, whether it can survive and whether or not it has to push through some pretty challenging tax increases as well. Let's turn over to Germany right now. Slightly more positive, at least on the surface, for the Chancellor Olaf Scholz. Ollie, talk us through the election results, the state election results of Germany, and where it leaves Chancellor Scholz at this point.
Yeah, Tom, I mean, listen, on paper, this is a victory for the SPD and the Chancellor Olaf Scholz. Their party came in #1 in the Brandenburg election with 31% of the vote. Very close behind them, however, was the AfD. And going into this election, the reason it's one, well, Brandenburg is the sort of section of Germany that sort of encompasses Berlin. It's where the Tesla factory is. But it's also a place that has been held by the SPD since the reunification of the country in 1990. So if they were to lose that election and lose it to the far right, it would have been hugely significant. And the fact that they won by, 2 points is, yes, the sort of not the worst case scenario for them, but it's hard to say that this is a sort of clean victory. We should also say that this is an area that contains Potsdam, which is where Olaf Scholz's home constituency is. And it's maybe a region that has been doing a bit better economically, which is why it's perhaps not gone as far to the extremes. It's growing at about 2.1%. We should say it's also where the Tesla factory is. So it's been doing all right there. But it's hard to call this really a decisive victory for the chancellor. I think that it is sort of falls short of the worst case scenario. And when we cast our minds a week from now, which is when the next federal election is, I mean, you look at the polls on the national level, it is looking very, very poor still for this coalition. You have Olaf Scholz, and not even in #2, the SPD really the CDU as number one and the AFD, the far right, going there in the second place. And when you look at kind of the other parts of Olaf Scholz's coalition government, the FDP and the Greens, neither of them had enough votes in Brandenburg to be part of the local parliament. So again, this is a very sort of difficult decision to silence, for the record, the conversation around who is the right candidate to lead